Good afternoon. I'm Robert Mays with BlueCreek Investment Partners. Well, I'm sure many of you were focused on March Madness and the basketball tournament over the weekend, following your teams as they either won or lost inside those brackets. Now, I, for one, lost interest in the basketball tournament after the Longhorns were defeated in the first round. But there was something else going over the weekend that I'm sure many of you were focused on as well, and that was the healthcare vote on Sunday night. We've been talking about the impact that government policies has had on the free markets and, in effect, on the impact that they'll have on the economy for the last year and a half. Whether it be healthcare or energy or even the finance and the banking industry, all three of these government policy has become much more interfering, if you will, with the ongoing practices and business models of each of these sectors, to the point that many investors have as a concern as to whether or not the stock market is going to be able to continue to go up with so much government intervention. Well, certainly Sunday night was a spotlight on that in terms of the healthcare sector. So as we look at that, really we're going to focus today on the tax component of that. Now, the first thing I'd say that has nothing to do with the healthcare bill is that we are expected to see taxes on income brackets go up from 2010 to 2011, from a low to a high of 10% to 35% this year, moving to 2011 to a low and high of 15 to 39.6%. So already, without any kind of health care component to this, tax brackets are expected to go back up to where they were before the Bush tax cuts. Now, in addition to that, what we're looking at are three other components where taxes are going to be imposed in this health care bill. The first is going to be an increase of the Medicare payroll tax of 0.9%, which essentially will raise the total payroll tax up to a 2.35%. Now, that is not expected to be imposed until the year 2013. That date is an important date. A second is going to be a Medicare tax that will be imposed on income, on dividends, capital gains, and other investment income, which will equate to 3.8%. So if we look at where capital gains tax are today at 15%, they're expected to go up to 20% in 2011, and then if you impose this in 2013, then that total capital gains tax will be 23.8%. The last one that tax that will be imposed really isn't until the year 2018, and it was because of so much pressure brought on by the unions to be able to push it out that far, but it deals with what's known as the Cadillac plan and the tax that will be imposed there, which is going to be a 40% tax on any excess of premium over $10,500 for a single person, and then the excess on any premium paid for a family of anything above $27,500. Now, there's no question that these taxes are going to be significant and would pose, in our view, a certain amount of headwind, if you will, to the economy. Do we think that it will stop the economy from growing? No. But we do believe that it will hinder that growth and certainly slow that growth down. But here's the real issue. This is out there in 3 years. It's 2013 to 2018. And there's a lot that can happen between now and then. As we well know, just what took place last night, that bill alone is going to be passed back up to the Senate to be reviewed, and if there are any changes whatsoever, then we're going to start this cycle all over again, because they'll have to come back down to the House. But even with that said, 39 states across the country are already working towards some kind of legislative or legal action to really prevent their states from being affected by this federal law. It's widely expected that the constitutionality of the law itself, or this bill, is going to be decided in the Supreme Court. So if you take that into measure, as well as the fact that we have a 2010 election and a 2012 election, there's a lot that's going to go on between now and then before this health care bill could really have an impact on the economy. And therefore, in our view, it's not something that we should be too concerned with at this juncture. As we look at the economy, it continues to remain strong. Companies continue to be growing. Their profit margins are expected to widen over the next year. And so we believe that as it stands, that this could have some impact down the road, but it's too early to tell if in fact it's going to happen. It may not. Some of this may be reversed, or at least modified to be a little bit more market friendly, in particular free market friendly. Of course, that's, in our view, what's going to be best for the consumer all the way around. Well, these are indeed exciting times, and we'll just be paying attention to this very closely as further things develop. I hope that you have a good week, and look forward to talking to you again next Monday. Bye.